There are so many trading systems on the market, and you know this because you're going through the systems one by one, trying to find one that'll work for you. And that's the big issue. I've got a system that will work for you, but you can make any trading system work for you. It doesn't have to be my trading system or Tom's trading system or Peter's trading system or Henry's trading system. It can be any trading system that will work for you. Because what I'm going to show you today with my 30 years of experience in the market is that it's got nothing to do with the squiggly lines. I'm going to show you a system with squiggly lines. I'm going to take you to the charts, and I'm going to show you a system that will help you become a profitable trader, that will give you good probability trades, and will help you to manage your risk. Yes, we're going to do that. We're definitely going to do that today. But after we've done that, I'm actually going to show you why in the markets that's meaningless. Why in the markets it's something completely different that makes you profitable and is a certain business plan that you need to become profitable. Because in reality, the markets are actually a 50-50 game. And the sooner you understand that behind all those squiggly lines that you trade on a daily basis, there are human beings taking trades. There are human beings, buyers and sellers, all taking trades. And would you believe they all want to win? Every last trader out there wants to have a winning trade. None of them get into trading because they want to lose, or because they got a bad system, or because they believe their edge is not going to work. And the sooner you understand that we're trading against each other, the sooner you'll understand how the stock market, the Forex trading, or any market actually works at the end of the day. Are you sitting there looking at squiggly lines saying, I've got this system's going to make me rich, it's going to give me a win rate, and that guy that I paid thousands of dollars to for a course has told me that if I trade with this system and I follow these rules to the T, that I can't go wrong. I'll definitely make money in the markets, and I'll make money trading Forex, and I'll make money trading futures, and so on and so on and so on. I've heard it all before, and it never ever changes. And then you find yourself losing a bit, so you change the system, you go into another system, and then you lose a bit, and you go into another system, and you try that one, and so on. And you try so many, you change your system every 5 minutes, hoping that you're going to find that golden nugget in the markets, that golden nugget that's gonna suddenly turn everything around and make you rich. That's what you're hoping for, not realizing that trading is actually a career. Trading or investment or finance is actually a career. It's something you have to learn, something you have to get your head around. It's not a get-rich-quick scheme. Why do so many people think it's a get-rich-quick scheme? But it's some kind of casino that you're going to go to and pull a one-armed bandit and all the money is just going to fall out. Oh, I miss those one-armed bandits. They were so cool. You don't get them anymore. These days it's all buttons and stuff. I don't even go to casinos anymore because of that, because there's no fun in it, let's be honest. But the stock market or trading is not a casino. It doesn't work like a casino, and it's not gambling. It's all about strategy and how you approach the markets and how your business plan approach the markets. So after we've been to the charts, I'm going to give you the business plan that you need, which you don't have to write down. It's just the 2-step business plan that a lot of you guys have seen me talk about before. And if you don't know me, I'm Rob. And if you do know me, I'm Rob. So just thought I'd let you know, in case you're watching me and thinking, who the hell is this guy? Well, I'm Rob, yeah. But anyway, at the end of the day, you want to become a profitable trader, and you're tired of losing in the markets, and you're wondering why. And it's because you're placing all your emphasis on the system and the squiggly lines, and you're expecting that to make you the profit. And unfortunately, that's not going to make you the profit. A win rate in the stock market, or in Forex trading, or in futures or commodity trading, a win rate is completely meaningless. So many traders that I come across, the first thing they ask you is, what's your win rate? The most unimportant question on the planet is, what is your win rate? Because really, how does a win rate make you profitable? Because I can win 9 trades out of 10. And that gives me a 90% win rate. But the 9 trades that I won $10 on. The one trade that I lost $1,000 on. And that puts me in a gargantuan loss. Doesn't make me profitable, but hey, I can boast a win rate of 9 out of 10. Now, how does that make a win rate important? A win rate is meaningless. The real question should be, are you profitable? Do you make money? Do you make any kind of money And what is your profitability? That's the real question. Not what's your win rate and how many green bars do you have. And I see these guys showing their little phone and all their little wins and all their little losses, and half the time I don't even understand what they're doing. To be perfectly honest with you, when I started trading, we had pens and pencils, man. We didn't need phones and computers and all the rest of it to trade, and it is nice to have and it is fun to have, and I love the technology. We used to dream of having this scenario because we used to pick up the phone and phone the broker to make a trade. And back in those days, we traded with stocks, not with all the forexes and that sort of stuff that we can trade with now, and indexes and what have you. These days, I use stocks as an investment. I just buy them and forget about them and leave them. And I trade the indexes and the currencies and the commodities and that sort of thing, because those are moving, those are fast, those are great to trade with. And with stocks, you can just buy them and leave them, and you get dividends on them and they grow, and forget about it. Don't worry about it. That's fantastic. It's good stuff. But while I'm rambling on, guys, let's go to the charts. Let me show you a system of support and resistance and price action that will give you some kind of benefit in the market, some kind of probability, because we take trades based on probability. Based on the probability of what happened in the past, we expect a similar thing to happen in the future. And that's why we take the trades in the first place. So that's what the systems are based on, but it's the strategy that's going to make you the money at the end of the day. So really, guys, go and have a look at the charts with me here quickly, and then let me talk to you about how you can actually make the money from that scenario. So any trading system can work for you, but this trading system is most likely the easiest, simplest, and most straightforward trading system that you're ever going to come across. I don't say you should change your system. You should never change your system every 5 minutes, but these are just squiggly lines at the end of the day. And if you found something that works for you with indicators or moving averages or MACDs or whatever system you might have, Bollinger Bands, Fibonacci, whatever the case, then use them. By all means, it's not going to change the world, but you need some kind of a probability in the market to take a trade so that you can become profitable. And I'm going to show you how you can become profitable after we've looked at the charts, because becoming profitable has got nothing to do with this. It's got nothing to do with the actual chart. It's got nothing to do with the system. The system is a probability trade. You look at what happened in the past and you look at where you might be going in the future. The other thing you look for on the charts is we look for liquidity areas. We look for areas where there might be money and orders lying. And now on price action, so what you're doing with that is you're saying, well, there's a support level here. There's an area here where the market likes to come to, which means there's a lot of money lying in that area. Or there's a demand area or a supply area or something to that effect. This is the SA Top 40 looking to take a long trade out of here because it's hit support and it's going to continue on to the long side. But how do we look for support and resistance levels in the market? This is probably one of the most simple systems in the world. So when I look for a support or when I look for a resistance level in the market, what I simply do is I go to the day chart, because the day chart gives you the most reliable information. The lower time frames give you very unreliable information. So on the day chart, what you're looking for, you turn it into a line chart. Why? Because on a line chart, you get the closing prices, because you don't want the candle prices, which are highs and lows of the day. But we trade with the candles, and I'll tell you why now. Now on the closing prices, you can see the resistance here on the daily, where the price keeps getting there, keeps getting there, keeps getting there and going back, keeps getting there and going back. Now it's a general area. It's not an exact line like people tell you. It's a general area of where the price likes to hang out and come back, which means there's lots of orders in that area which are causing it to come back the other way. There's sellers and buyers in the market all the time, no matter what you do. Now, you want to look for your main and your lowest level on here, the support, your main support, which is down at the bottom here, where it's hit there, it's hit here in this area. So that's quite an important area. There's a hit there. So you can see 1, 2, 3, 4 times it's come through here. So it looks like an area of importance where there will be some money lying, a major support area. But there is an interim support area before that down here, where you can see the area, the price hits here, price hits here, price hits here, price hits here, and it hits here a number of times. The more times it hits, the more chance it's got of breaking through. But you can see that's a really important support area where the price likes to hang out and go back, and it was in that range. Now this was bearish, so it would resolve to the downside, and it has now resolved to the downside, and I'll show you that scenario. But what we do is we take it back to the candles, and then we take it back to the 4-hour chart, which we're trading on. Now on the 4-hour chart, you can look for other areas of confluence. For example, you can look for areas of supply, areas of demand, fair value gaps, whatever you want to look for, you can look for it there. There's a fair value gap there. There's an area of supply there. You know, if you want to trade with those and get complicated, you sure can do so. What we also trade with is trend resistance and trend support. We draw the lines in and we use the trends if we need to. But in this particular case, it's more in a flat range, so we're not using that. Now you can clearly see it's broken through the main or this mid support, and it's come back and retested. We like it to retest if it breaks through, and it's continued on down to the main support area, which it has now touched, and it's starting to bounce back up. Now, how do you trade out of an area like this? So if you wanted to go short over here, say, you see there's a big red bar that came out of there. That's all you need. Nothing special, nothing complicated. After the red bar, you can just take the short trade. You see a green bar come out of there, you take the long trade. They don't always work out because your target would have been up here, and that's gone short. You put your stop loss below that area, takes out your stop loss, you lost that trade. But the reason we use green and red bars and we don't change all the colors and we don't mess around is that you can look at a glance and say, oh, there's a green bar coming out of there. It's coming out of the support, and that's a long trade. I use the bars also to tell me that there's an undecided candle because the buyers and sellers are undecided as to which way they're going. Or there's a lot of buyers coming back in, or there's a lot of sellers coming back in. The big red bars tell you it's very bearish. The big green bars tell you it's very bullish. It's very easy to spot. You don't have to get overcomplicated with candles. If you're trying to trade on candles, just remember the candle's only valid for the next candle. It's not valid for the whole chart. So just look at the chart pattern rather and work according to the chart pattern. Look for patterns in the market. You can download these off Google, by the way. Head and shoulders. That's a shoulder. That's a head. That's a shoulder. This didn't play out because it did break the shoulder. But a head and shoulders, what it normally does, if it breaks to the downside on a head and shoulders, it'll play the length of that head all the way down to the bottom. Very careful of those. Head and shoulders are big signs in the market. And there are many other patterns as well. Cup and handles and all kinds of different ones. So look out for patterns in the market. Now, here you are, resistance, support. This is a big green candle going up. This could be a good long trade. Now, if you go here to the DAX, for example, this was in a support and a trend support and a trend resistance. It was going up, but it's now broken the structure. It's broken the trend structure, and it's on its way down, and it's come and hit a main support level, and it's giving a green bar coming out of that main support level. If that green bar closes, which will close in 2 hours time because it's a 4-hour chart, then it'll continue on to the long side. If it breaks back into this level and breaks down, it'll continue on the downside. You've got to have a look at these scenarios. You see here as well that US 500 had a trend running up here. It's broken the trend. It's broken through. It's broken out of its flag pattern as well. It's broken into the support. Now we wait to see if it breaks to the downside or if it breaks to the upside out of that area. SA40, here's a clear long trade showing here where there's a green bar coming out of this main support. So you can take a long trade when that closes. This has come back in here and it's in a bullish trend. There's 3 ways that we trade, guys. We look for trends. So if it's in a bullish trend or a bearish trend, we trade with the trend, or we trade in a range. If it's in a range, you trade in that range. If it breaks out of the range, you trade away from it, or we counter trade. And counter trading can be quite a thing, because if, for example, on this US 500, it has now broken structure, it's broken out of the structure, and if it breaks through here and starts giving you a signal that's coming through the support, you're going to counter trade against the trend because it's broken the trend. It's 3 ways that you trade. It's not complicated. It's not rocket science. On the trend side of things, this is a trend resistance on the 4-hour chart. The US dollar, Aussie dollar, US dollar has come up, hit the trend resistance, given us a red candle down, calling for a short trade out of here. So that's a short trade. You look at gold, we've got a long trend going up. And if you were to draw this in, we weren't using it, you probably find that it's hitting the trend support. So you're looking for a long trade going back up on this one, because it was long all the way up in structure. So this one you're trading with the trend. It's staying in the trend. And these areas here that I've drawn in, you might be wondering what that is. Did I go to the day chart and did I draw support and resistance in? No, this is a trend. So what I'm looking at here, this is an area area on top here of supply of money because there's big red candles coming down from it and there's a little green candle before it. What that little green candle shows you, you see the little green candle? That is showing you that there's an area of supply of money here. And then it came down, and then over here, there was an area where there's an area of, you see the little red candle before the green candles? An area of demand of money, which means there's orders lying here. It broke through the orders, but it has come back to take more orders. And here there's more orders lying down here. So that's supply and demand trading. I like to use supply and demand within the time frames just to tell me where the money might be lying around or in waiting for me to come and take it. There's also a big fair value gap in this area here. But don't overcomplicate it, guys. No need to overcomplicate it. The simplicity of it is, I looked at, there's a green candle here. So in all probability, I'm looking for a long trade on this particular product. But it's not about win rate. And if you understand it, it's a 50-50 game. You understand that this trade could win or it could lose. And if you go and watch the rest of my video, you'll understand how you can make money out of these trades and what it's all about at the end of the day. So now you've seen the charts and now you know what the system works and what it's about and how you can manage your risk and what the probability is of you making money in the market. Now, how can we make the money? Well, it's quite easy. Now what you have to do is put a simple two-step business plan in place. And I keep hitting this microphone here, so please excuse me if that happens. I shall try to fix that up. But okay, so now you take your business plan and you say, my business plan is as follows. I will risk 1% on every single trade that I take. That 1%, if it's a $100,000 account, I'm just going to use that as an analogy because I did have someone say, but people don't have $100,000. Some have got 1,000, some have got 5,000, some have got, that's fine. 1% of $5,000 account, 1% of $10,000 account, doesn't matter. If you've got a $10,000, your risk is $100. You've got $100,000, your risk is $1,000. Simple as that. I'm using it as a round figure. So let's use a $100,000 account because I'm sure you're all rich and you can all afford it. Now you've got $1,000 risk on that one trade. The next trade you take, $1,000 risk. Not more, not less. That's it. And when you take the trade, have your mindset such as, I know I'm going to lose that $1,000. There's a good possibility I'm going to lose it. Accept that you could lose that $1,000. Just accept it. It's going to happen. It could happen. It might happen. Then you can take 10 trades on your account and you're risking 10% of your account max. Okay. Don't try and double the $100,000 in a day because that's not going to happen. Try and make a couple of, who would be upset with making $500 a day, $1,000 a day, $2,000 a day? No one I know would be upset with that. So that's what you want to do. So what you do, you take the $1,000 risk on each and every trade that you take. How many trades can you take? There's no rule to that, guys. If you take 10 trades, you know you've risked just 10% of your account. Will you stop at that? No. If there's an 11th trade available, take it. Why not? All you know is that you've got a 50% chance of win rate. If you win half those trades and you make 2 to 1 on the wins, and you lose half those trades and you only lose one on the losers, you're in a big win. You're actually doing quite well. But now what you've got to be careful of is when it goes into loss, you don't add to the losses. If it goes into loss and it takes out your $1,000 stop loss, your invalidation, because that's where you put your stop loss, by the way, next to the invalidation area, then you accept it and you lose it and you walk away. Next trade, new trade. If it goes into profit and it goes into a decent profit, let's say it goes $1,000 into profit now, what you do is you move your stop loss either up to break even or even into a profit level that you feel comfortable with, and you follow the trade up. When it reaches target, don't take profit. Move your stop loss right up to behind it on the target and let it carry on. Let it carry on going, because there's no worse feeling than getting out of a trade in a small profit and then watching it go further. It's actually worse than taking a stop loss. Now, a stop loss is an invalidation area. So the way you take the trade is you first look for the invalidation area and you say, I'm going to put my invalidation here. Then you work out how much your $1,000 will fit into that stop loss, and that's the size of your contracts. Don't just buy the same contract size on every single trade. Buy your contract size according to your risk. Now you've figured out the size of your trade and the two-step business plan. Stop loss $1,000 on each trade, or 1% of each trade. A second part of your business plan is follow your win with your invalidation, because once you've moved it to break even, the trade's costing you nothing. It's not costing you $1,000 anymore. And once it moves into profit, you're making a profit. You're not making a loss. And somebody said to me, yeah, but if it goes down to break even and I was $1,000 in profit, then I've still lost $1,000. How is that possible? You never invested $1,000 into it. The trade is not closed. You haven't lost anything until the trade closes, and you haven't won anything until the trade closes. That's when you've made your profit, when the trade actually closes. When you see your trade in a loss, you're not losing effectively until the trade closes. And that's why people add to their losses, because they think, well, if I keep adding to this, I'm not actually losing because I'm still in the trade. So I've still got my balance. And that's why people do that in the first place. But if you did that on your wins, wow, what a pleasure. Why do you think you've lost $1,000 if it went into profit and then went to break even? You haven't lost anything. You haven't won anything, but you haven't lost anything. That's the point. That's the business plan. And that's as simple as trading gets. The thing is to get your head around the fear, because most of you, when you go a couple of cents into profit, let's say you got a $2,000 target, you go $200 into profit. The first thing you do is, ooh, I'm in profit. There's a green one there. I was in the red just now. Let me take the profit, because it's a profit. Profit's good, isn't it? No, it isn't, because now you're going to watch it go all the way to where your target was, and it's more upsetting than if you'd actually taken a stop loss. Don't jump the gun. Don't take small profits. And aim for the big ones. Aim for those big profits, because that's where the money is at the end of the day. If you want to make profit, aim for the big ones. The small ones don't matter that much. You're going to have a whole mishmash of small wins and a whole mishmash of small losses, because when you move your stop losses up into profit and you think, well, I'm following my target, there'll be so many times that it comes back and it takes out your stop loss. And you'll only get a $500 win or a $700 win or a $600 win or a $1,000 win instead of the $2,000 that you wanted. There'll be a whole mishmash of those wins along the way. But that's great. They'll be in there, but there'll be a whole mishmash of losses along the way as well for some of the size, which will take you out as well. So you'll kind of have a sort of break-even scenario with that. Then you'll get that trade that makes you the money, and that's what you're looking for. A couple of those big trades are the ones that you're waiting for. That's where the money is in the markets. And the sooner you understand how the markets work, the sooner you understand that the markets are 50-50, the sooner you understand that there's buyers and sellers in the market, not just you. You're not the only person in the market trading against a bunch of candles and lines. The sooner you'll become a profitable trader and you'll understand how to make the money. Guys, thanks for watching. Don't forget to come back and watch the live show tomorrow. Tomorrow's the Euro session, the earlier session in the day, and we're going to have a chat again. And I'm not one of those live guys that sit there trading 5-minute charts and showing the bars go up and down and, goodness me. And, no, I'm here to chat to you, to alleviate your difficult questions and help you to become a trader at the end of the day. That's what we're all about. Guys, I'll see you tomorrow at the live show. Thanks for watching today's video. Ciao, thanks, and bye.